Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. We're joined by Lisa Mateo.
Yeah, and we've had a mixed picture in tech earnings, so I want to start there. Alphabet and Intel we're talking about. Yes, Google parent Alphabet, we're starting there. Its shares have been higher, right? The specifics are that it reported a beat on first quarter revenue profit. That was thanks to strength in search advertising. Google Cloud actually brought in operating profit beat estimates, although it slightly missed on sales. But this was really the news that the company needed because it needs to justify all the spend that it does in the AI race. Yep. It's been spending a lot of money there because growing competition, right? Yeah. You have to spend more on infrastructure, on research, on talent, on all those things. So yes, Google does benefit from AI startups that spend on its, its cloud and business tools, but people are starting to think of conversational chatbots as an alternative to Google search.
Nobody cares.
That's what they're dealing with.
Nobody cares. All they want to know is YouTube killed it because of their incredible creators like Lisa Mateo.
Most definitely. Okay, so we mentioned Alphabet. Let's go to Intel. So this is the flip side, right? So, so you have their shares have been down as much as 7%. Weak forecast for the current period and really tough words from its CEO, Lip-Bu Tan. He delivered his first earnings report from the company. So I wanted to point out a couple of things he said. Corporate culture needs a shakeup, right? He's going to cut jobs, remove layers of management, force everyone back to the office. Expects operating costs to be reduced about $17 billion this year, $16 billion in 2026. And then when it comes to levies, he said that a tariff-fueled recession could torpedo chip demand. So he had a lot to say in his first earnings report that came out.
It basically is just a mess. I mean, it is.
And he's got to clean it up. We go to T-Mobile, the second largest wireless carrier in the U.S. We've been hearing about it, right? AT&T, Verizon. So now T-Mobile. Shares have been lower as much as 5%. Mobile phone subscribers missed about 495,000 subscribers that they added. It still added more than AT&T. Verizon reported a decline, but weaker wireless numbers really overshadowed kind of positive financial results. I mean, EPS, you had topped estimates. First quarter revenue, too, raised its full year profit. But it's just this race to compete in such a saturated market between these three. You know, it is. People are tightening their budgets, right? They're holding onto their phones longer. The CEO says the company is not going to absorb the handset price increases. So you have all these things going on. They're rolling out promotions, incentives. They're just trying to get people to sign up for it.
So, I mean, I think AT&T did well on their subs. Verizon and T-Mobile did not do well on their subs. Correct. And that's just this quarter. Next quarter, it could be a completely different story.
Different story.
It's a zero-sum game, basically,
Okay, and this...
Wait, whoa. I'm looking at my cell phone bill. It's not a zero-sum game. It's like a mortgage payment.
That's how they grow their revenue, is just raising prices. And,
they do, and they have been.
And it's a triopoly. I don't know.
Triopoly?
Yeah, maybe. I don't know.
It's like a bank. I mean, it's outrageous.
It is.
Tell me out on a live chat. Am I wrong? Yes. I don't think I'm wrong. What else?
Family plan is killing me. Okay, exactly. So we go to Skechers. Their shares have been off as much as 5%. The reason why it withdrew its full year outlook, global trade policies, they make a big portion of their shoes from China and Vietnam. So first quarter sales below estimates, but it's been trying to compete, right? You have Nike and Adidas, so they offer the cheaper alternative, right? They're trying to kind of break into that market. Its CEO just says they're trying to navigate, talk about economic volatility. We've heard that a lot too. The company said they're working to lessen the impact of new tariffs, sharing the cost with vendors, optimizing supply chain, adjusting prices. But that too, like we've seen with the wireless thing, this is a big competitive market.
Stock down 25% this year.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.